In June 2026, the enthusiastic coverage of the Xbox Game Showcase was suddenly shattered by investigative reports from Bloomberg and The Verge. Leaked data revealed that Microsoft was drafting plans to shutter, merge, or sell off several of its key first-party development studios. The target list identifies several pillars of the Xbox ecosystem: Ninja Theory, the team behind Hellblade, and Double Fine Productions, led by Tim Schafer. These are the developers previously marketed as the foundation of Xbox's commitment to artistic diversity. These studios are now reportedly in emergency negotiations with Microsoft executives. Their goal is to orchestrate a management buyout or third-party acquisition to avoid complete dissolution. This follows a pattern established just 2 years earlier with the closure of Arcane Austin and Tango Gameworks. For developers and players alike, the creative safe haven promised by Xbox leadership has been replaced by a recurring cycle of studio liquidations. This sudden austerity drive presents a massive economic contradiction. Microsoft recently completed a historic $75 billion acquisition of Activision Blizzard, a move signaling virtually unlimited capital for the gaming sector. If the corporation has the resources to execute the largest deal in tech history, why eliminate 100-person creative teams to save on operational costs? The answer lies in a shift in leadership priorities. Under Phil Spencer, Xbox championed a period of creative leniency, where Microsoft subsidized a wide variety of niche artistic games to build brand value. But the board of directors, led by CEO Satya Nadella, has changed the directive. Nadella stated the entertainment division must become a self-sustaining business. The financial focus has officially moved from aggressive expansion to a strict demand for immediate, high profit margins. To understand why these acclaimed studios are on the chopping block, we must look past reviews and analyze the specific financial metrics governing the Xbox division. The Netflix of gaming model relied on a specific cycle. Buying diverse studios would create a constant stream of content, and that content would drive a never-ending rise in Game Pass subscriptions. However, internal data shows that growth has stalled. Despite the addition of massive franchises like Call of Duty, active Game Pass subscribers have plateaued at 34.5 million users. Compounding this is a severe decline in hardware. Xbox console sales have dropped 31% year-over-year. Without more consoles in homes, the path to finding new subscribers for Game Pass has effectively narrowed. This stagnation has left the Xbox division with a net profit margin of approximately 3%. For a company that just spent $75 billion on an acquisition, a 3% return is considered a financial failure by the board. When the subscriber base stops growing and hardware sales fall, the economic engine required to fund a massive, diverse studio portfolio simply stops working. These mid-sized AA games occupy a difficult position in this new math. These are narrative-driven, artistic titles that require tens of millions of dollars in upkeep and years of development time. In the past, these projects were valued for their prestige. They attracted hardcore fans and gave the Xbox brand a reputation for supporting unique, high-quality storytelling. But within a subscription model, they are a one-time expense. Because these are linear experiences, a player can finish the game in a weekend and then has no further reason to stay engaged with that specific title. This graphic shows the problem from a corporate perspective. A linear game has a single point of engagement. A live service game, however, uses recurring microtransactions to generate continuous revenue over months or years. This financial reality is driving a management reset. Craig Duncan, the head of Xbox Game Studios, recently resigned, and the new leadership under Asha Sharma has promised a 100-day factory reset to eliminate assets that don't meet these new profitability standards. In an ecosystem that requires infinite player retention and constant spending, a beautifully crafted 10-hour story is no longer seen as an asset. It is viewed as a liability on the balance sheet. For the studios currently on the kill list, the only hope is a management buyout. They are attempting to buy their own equity back from Microsoft to regain their independence. The cost of that independence is high. To lower their operational costs enough to survive as a standalone company, these studios are expected to lay off between 30% and 50% of their staff. Even then, they won't own their history. Lucrative intellectual properties like Hellblade will remain with Microsoft. These creators will have to start over with entirely new franchises while competing for funding from other major publishers. If these emergency talks for a buyout or a sale fail, the permanent closure of these studios is the likely outcome. For these developers, independence means entering a volatile market without their resources, their staff, or the rights to the games that made them famous. These moves suggest that Microsoft is shifting its focus away from the console hardware competition. Internal analysis shows that limiting major games to a hardware platform with declining sales is no longer sustainable. To maximize the return on massive acquisitions, Xbox is moving toward becoming a third-party software publisher. By selling their major titles on rival platforms like the PlayStation 5, they can reach a much larger audience and increase their profit margins. This strategy demands consolidation. Budgets are being pulled away from smaller, creative teams to focus entirely on mega franchises like Call of Duty and Fallout, games that generate the massive, consistent revenue Wall Street demands. The crisis of June 2026 marks the point where the ambitious Netflix for games model met the reality of the balance sheet. For the global gaming community, the period of subsidized, diverse gaming is being replaced by a corporate structure built for software publishing margins. Microsoft is no longer building a creative haven, it is building a ruthless software leviathan.